We are live. All right, everything looking good. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on April 13th, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If you guys could just let me know in the chat, everything is coming through loud and clear, but we appear to be looking good and ready to roll. So obviously another couple of crazy days. Appreciate that, Bobby. Thank you, my friend. So a couple of crazy days in the markets. Basically saw them rolling over, continuing to roll over, and then we saw a little bit of a pop to the upside pretty much today from stocks and crypto as well. At this point in time, I mean, there's really no denying at all whatsoever that crypto is basically just trading right in line with the stock market. Sometimes we'll get like overnight moves, so it's more like, I would say, closely correlated with like the futures charts. So when stocks are closed over the weekend, a lot of times we will see crypto kind of front run that move, or when the actual markets are closed during the week, same thing. We'll see crypto kind of front running that move in line with what the futures are telling us. So at this point in time, stock market and crypto is completely coupled. The correlation is through the roof. So as far as I'm concerned, crypto is just another form of speculative stock investment, or tokenized stock, or tokenized investment, whatever you want to call it. There's no reason they should be as correlated as they are. There's always, one of my biggest problems always with crypto has been how correlated every shitcoin is to Bitcoin. And now we're seeing all the shitcoins correlated to Bitcoin, and then Bitcoin is correlated to the stock market completely. So at that point in time, it's basically just like a leveraged, position on the stock market or tech or whatever, however you want to talk about it. So, is it the future technology? Is it emerging technology? Is it the future of the internet? None of that really cares. None of it matters. I mean, the whole idea of it being this safe haven asset, when clearly stocks are a complete risk on asset, is clearly false. The idea of it being digital gold, when it's directly correlated to the stock market. I mean, so are stocks gold then? Are they digital gold, or I mean, it doesn't even make sense. The arguments people make anymore just literally have all completely fell apart. So that being said, let's jump right in. So we're seeing at least a temporary top on yields. Again, we could easily just continue higher, but this is what we've been expecting, what we've been looking for, somewhere around basically like that 2.75 level. I didn't quite expect it to get up to 3. So this looks good here for now to kind of cool down a little bit. We broke above some key levels. I think we really need a consolidation, a little bit of a back test before we're going to be able to trend higher, but still looks very, very bullish longer term. So TLT obviously came down here and hit our next box, literally bounced off of it, a couple candles here now. So this is obviously going to be inversely correlated to the actual yields, but this is essentially just like speculation on the treasury market. And we're basically at that area. I would expect at least some kind of temporary bounce. We could go slightly lower here, but to tell you the truth, I mean, this has really just been bleeding out for some time. So I would not be surprised if we see DXY, dollar, and TNX yields start to roll over now, and then we start to see bonds and gold really catch a bid. So gold has been kind of rallying a little bit lately as yields and the dollar have been strengthening. That's definitely that fear play for sure. It's at some key levels right now. But I think a lot of the outflows from the bond market are basically just going into some of these other assets. And then also, people are buying the dip or trying to pick the bottom or whatever on a lot of these things as well. So looks like TLT probably going to try to carve out some kind of bottom here. Much rather see some sort of divergence or whatever. But we have this decent trend descending channel going on, and we're at the bottom of the channel. So, realistically, we have two pretty clear touch points on the top, and then obviously our parabola, like the blow off top as well. And then on the bottom, we have the blow off bottom, and then like the close right here. And then again, a second point here. And now here we're basically at the third point. So typically with channels, trends, patterns, I always give favor to the actual pattern itself. So if we're trading inside of a range, a channel, whatever, I always just assume that that will hold until it doesn't, because you're really only going to ever break and confirm and then have continuation one time ever. Sometimes you'll have a false break or you'll have a breakout and it fails in one direction or other, but that's essentially a failed breakout. So it's really not a breakout. So a real breakout only ever happens one time. Otherwise, you're just range bound forever or trading inside of that range. Even if the range is ascending or descending, the price action might not necessarily be range bound, but you're still inside of that pattern. So as far as I'm concerned, as long as we're in this pattern, I assume we stay in this pattern. That tells me that more likely than not, bonds are going to see some bullish movements into them in the near future, and we'll see rates kind of cool off a little bit. So U.S. oil had a nice little bounce. We came back down to that exact level. I think we had a descending trend line on the top. Okay, yeah. So what we're paying attention to now is we have this triangle. We basically came back down and retested the bottom of the triangle. We now have a clear 2 points on the bottom. We have 1, 2 on the top. And now technically we are broken back out of the top of this descending triangle. So the real thing we need to pay attention to is obviously we have the fib level here in orange. And then the most important level, it's nice to see a breakout of a triangle, especially opposite the trend. Like this is looking like a bearish, triangle that's going to break to the downside. And then we obviously push out the top of it. But a lot of times you'll see a move like this or attempt to save the 821 cross or attempt to break out and then it fails and rolls back down and then it will actually break through the bottom. The real level to watch is 1, this Fibonacci level at 108, 2, the 114.42 because that's our previous lower high. And then obviously being above 100 is good as well. So oil definitely looking okay right now. It was looking a little bit weak into this consolidation pattern. I'd much rather see this be, basically like more of a neutral pattern if it's going to continue to the upside. But it doesn't mean that this can't break to the upside. It just has a lower probability. So it's at about a 33% probability to break to the upside, 66 to break to the downside. Looks like it is currently in the process of or already breaking out to the upside. So next areas to watch are those ones we discussed, 108, 114. So Dow Jones. So we actually broke down and lost the 200 exponential and simple. They flipped back over red. This is not what you want to see. This to me is not what happens when we're getting ready to break to the upside. Now, does that mean we have to be bearish? No, we could easily see this pattern play out into an inverted head and shoulders and then break to the upside, new all-time highs, and go to highs. That is always a possibility, and we want to remember that's always a possibility. But the fact of the matter is, typically, when we lose the 200 exponential and simple, we come back one time, we retest it, and then if we can't hold that levels, we see continuation. So at this point in time, we have a high, we have a low, we have a lower high, we have a lower low, we have another lower high. So I would expect another lower low and continuation to the downside. Now, in the event that we do close back above the 200 simple and start to flip these back to the upside, same thing. We're going to be watching this 35,806 level. But, honestly, I'm bearish. The Dow Jones does not look good. It's like neutral bearish right now. Same with the SPY. SPY broke back down, lost the slope once again on the 200 exponential. It looks very weak. It was able to reclaim the 200 exponential, but now it's just back in between 200 exponential and simple. Did have a bearish engulfing candle, definitely a good sign. But what is this based off of? Is it inflation numbers? Is it earnings numbers? Is it, just everybody was so bearish and now things aren't that bad and now they're good again because they're not bad, or they're bad but they're not as bad as we thought they were going to be, so that's good? Sure, maybe. I mean, the CPI was bad. Overall inflation, obviously highest numbers since like the 1980s. Of course, it's like, oh no, this is the peak, this is the peak. Sure, it's going to be the peak forever until eventually it's right, and then they're going to be like, this is the peak. The truth and what we're paying attention to here is that when we look at the actual inflation numbers, obviously they're calculated year over year. So when we look back at the inflation numbers from last year, this time we had like 2, 3, 5%. So as we start calculating year over year, if we had a 5% print last year and now we're running at 8% inflation, that same 8% inflation minus out the 5% print from last year is going to look like 3% on the chart. So even if we see inflation peaking, it's actually the growth or the rate of change over the previous year that's peaking. It's not like all of a sudden prices are going back down. Prices don't go down. Typically with inflation, they go down with innovation like technology or, something like that. Like all of a sudden you don't have to pay a grocery clerk to check you out. Now you have a robot that does it instead. So the company saves, $20,000 on that person's salary or whatever. Therefore, they're able to charge less for groceries or something to that effect. Obviously we see it all the time in technology. But typically actual inflation on like goods and services in general, typically it doesn't go down. So it's year over year numbers that we're talking about. don't expect to, see prices down below where they were 2 years ago, because now inflation is not going up anymore, or it's going up slower. In all actuality, we're still getting inflation. We're just getting it at a slower rate of increase to the upside. So that's the most important thing to remember here. So S&P doesn't look particularly great, but at least it's reclaiming those levels. Again, we're watching those key areas for a potential breakdown. NASDAQ looks terrible. It has broken back below 200 exponential and simple. It got completely rejected. Never even retested a 200 simple. Technology right now is dead. I mean, this looks like the dot-com bubble burst for tech. Now, is it possible once again we see an inverse head and shoulders play out? Yes, it is. And, honestly, the measure move, if we get back up here, say this is the shoulder we're putting in right now, and this is sort of like a double top head right here. The neckline essentially is the 200 exponential and simple. So breaking back above those levels, taking out this high right here, probably puts us back at new all-time highs. So definitely a big deal for the index. Now, what is that going to look like for individual stocks? I mean, most of them are probably still going to be wrecked in the tech sector. Russell, again, looks terrible. Had a nice push up here, but, we basically got rejected yesterday going into the close. Everything looked okay. They were starting to melt up. It was like, oh, things aren't that bad. And then all of a sudden, just complete smackdown, close lower. So what is going on? Naturally, like inflows or bulls are just pushing the price up. And then if the bears don't come in and knock it back down, then we go up. Sure, maybe. I mean, or distribution's taking place right now. And this is like the LPSY, before we go lower. But we came back down to 236 once again. We're clearly below 200 exponential and simple, trending to the downside. We got rejected exactly at our horizontal, channel that we were operating in. This looks terrible. I mean, it really looks like we're going to the 382. This is a good candle. It's great. It's like, oh, we got a bullish candle. And it's like, yeah, we did. But do we just have a high, then a low, then a lower high, then a lower low, then a lower high again? And we're just waiting to put in our lower low? I mean, I would assume so. I don't see anything flipping around in these markets that's all of a sudden like, oh, now we could be bullish. We just got the highest inflation print, in most people's lifetime, or at least in the last, 40 years or whatever. Consumer price index through the roof, not as high, obviously. Producer price index, ridiculous right now. I mean, the highest we've seen in literally decades. So, I mean, what is your main argument for bullishness right now? I mean, I guess the main argument is that everything's priced in. The market already knows all the problems, everything bad that could possibly happen is already priced in. The market is 100% efficient, and we just peaked inflation. Not because we got a lower high than the last inflation count, but because we got one that's high enough and highest, and we're just calling the top. So you guys know how I feel about calling tops and bottoms. The likelihood of success is extremely low. If you were calling inflation top anytime in the last, 2 years or whatever, you were wrong, because we still haven't put a top in yet, because we just put in a new high. So if you were calling a bottom in a lot of the tech stocks or whatever, anytime over the last couple of years, you were wrong, because a lot of them are still just putting in new lows. So there's no reason really, pot stocks, same thing. No reason to be trying to call tops and bottoms on these things. They can run up and down a lot longer than you can stay liquid. So, the best way to get wrecked is trying to pick tops and bottoms without any kind of indication or anything from the market. So front run the market, and don't be surprised when you look back and the train runs you over. So XLE Energy putting in essentially new highs, at least a new high close right here. Looks strong. Ascending triangle probably breaks to the upside, and we see that continuation we've been discussing. We're almost up at what is it, 83 to 85 is the 886. Is the 886 internal retracement. So that's what we're paying attention to. Wouldn't surprise me if we see continuation. XTN transportation. Again, I mean, this thing was trading pretty technically for a while, and then it had that failed breakout to the upside. Came down here, just put in a new low. So transportation sector, new low, new cycle low. So is that bullish now? It's like, oh, we just put in a new low. We tagged the 236 finally, which was our target to the downside. So now it's bullish, right? Because we tagged the 236. No, there's nothing bullish about putting in a new low right afterwards, because we put in a new low on transportation sector. It looks terrible. We're hearing from UPS that they're going to be closing down hundreds of stores over the next few years. Everybody's raising their prices. Postal Service, UPS, FedEx, through the roof. We're finally seeing some of the prices or some of the problems come off on the transportation sector, and prices start to come down on some of the things that were super inflated. And then all of a sudden, we just put in a brand new low on stock price. We got a record high inflation print, record high, CPI, record high PPI, and that's bullish? No, this is just dead cat bounces, in my opinion. Dead cat bounces. We have confirmed into a bear market. Looks absolutely terrible. We have one bullish candle. So if you're not bearish, I guess you're bullish, right? Looks terrible. Financial sector continuing to melt down. We're seeing misses now as we see JP Morgan, reporting and, miss on one thing, beat on the other, but they already basically like downgraded themselves and their like projections going into the future. So they basically like try to a lot of times what these companies will do is they'll come out and they'll basically say, okay, look, I know you were expecting, 10% growth and that's what we've been getting, but things are looking bleak. So we're only expecting 5% growth this next quarter. And then everybody's like, oh, 5% growth, that's horrible. And you'll see, sort of a markdown in the stock price or whatever. And then coming into the next earnings, everyone's counting on that 5%. And what the companies are doing, they're kind of like underplaying their hand a little bit, acting like, oh, we'll be okay. 5%. Yeah, it sucks, but everything's gonna be good in the long run. And then they come out and then they beat, and then it's bullish for the stock price. But that didn't actually happen. They basically like these companies. I mean, you have to assume when they come out and give these projections, when they're giving bearish projections, they're giving projections probably worse than what they think they're gonna be. So if they then come in line with what they projected, that's actually not good. I mean, it's good that it's like accurate, I guess. But in all reality, most of the time they're trying to like undercut themselves so that when they go into earnings and they beat, they get a nice pop in the stock price and improve shareholder value. Because if you, the same way, if you come in and you beat, it's good, regardless of what the prediction was, because the prediction's already priced in now. You're already saying we're expecting decline in growth or whatever in revenue, in profits, whatever. So that's already priced in once they say it. So then when you beat or when you miss is the real factor. So if you basically give a bearish projection, that gets priced in almost right away, theoretically, efficient market hypothesis. And then you come out and then you miss, that's extra bearish because you already give a bearish prediction and then you missed, and that's bearish too. Or you give a bearish prediction and then, you beat, and then that's technically bullish, but are you going to be back to where you were before the bearish prediction? Probably not. You're probably going to be lower. So that's what JP Morgan's been doing, is basically, giving that lower than expected prediction, and then they're coming out and, beat on one, miss on the other. So it's basically neutral as far as I'm concerned. I still don't see it. I mean, if you look at the breakdown on these banks and where they're making their money, are they making a bunch of money off lending right now? No, because they're not lending to anyone. Well, what about when they were lending, all these mortgages, all these cars and stuff? Well, they were lending at record low rates. So, they're making this tiny little spread. And, even if rates go up, the risk goes up substantially too, because obviously we know all these prices are inflated based on super low rates. I mean, the only reason the economies around the world, the United States in particular, has been able to gain these ridiculous valuations over such a long period of time is because of record low rates, which is why we constantly see a descending line or channel or graph, of rates, or chart, I should say, of rates. So the rates are always going down, and that's what's helping to push up, asset prices, equity prices, etc. So if all of a sudden the rates are going to start rising, it makes sense, obviously, that we're not going to see these rising as well. So in my opinion, financial, banks, all this, not a good place to be short term, possibly not even long term, because they have a lot of if they come out with a Fed coin or whatever, what do they need all these banks for? We'll see. I mean, they're making their money, most of their money. If you look at actual, earnings, you look at the breakdown from these companies and you look and see where is their revenue actually coming from, how much of it is coming from loans, how much of it is coming from, speculating or quote unquote investing. I'm pretty sure you'd be surprised by the breakdown on that. So if the stocks are going down and the banks are investing in the stocks and that's where they're making their money from, well, it would make sense that, also in a rising rate environment where they're tightening up and not making as many loans and we're seeing velocity of money, fall off a cliff basically, it would make sense that banks are not going to do well into the short to medium term. So I would expect this to continue melting down. So we basically push back up to 618. I expect lower. So now let's look at XLV. Healthcare came up here, basically saw that potential. Now we talked about this in advance, how we sort of missed this little, measure move right here, came all the way back down. And then we were talking about a potential double top scenario. So this looks like the beginning of a potential blow off top. Now, does it have to be? No, it could easily go to much higher prices. Does not have to stop here. This looks to me like a potential double top scenario, at least temporarily. What we want to see from this is when we come down, we don't want to see it come down here and take out these lows. We have a pretty clear defined support area down here around like 125. We don't want to get down below that level. If we do, it's going to start looking dangerous. And then, at that point in time, we could start looking for, potential targets to the downside, etc. But as far as I'm concerned for right now, this looks like it's topped out, at least for now. Now, I'm still long-term bullish on healthcare going into recession or, regardless of what happens into the future. But right now, definitely not time, in my opinion. XLP, consumer staples, strong, going back up here at all-time highs, continuing up here. This thing obviously is going to have to cool off. I mean, it doesn't have a choice. It's at ridiculous levels. The stochastics rolling back over here. We could easily bounce it again and get another high right here. What we don't want to see on this is we don't want to see the stochastic come up and put in a lower high and then roll over. So we have a high, then a lower high, while we have a higher high on price action, which we're continually making higher highs. But this still looks bullish for now. As long as we're holding there up here at these levels, it looks really good. I mean, honestly, if we look at just our previous tops and stuff, anything above like 77, 76 is bullish. And again, this looks good going into the potential uncertain environment that we have. XLU, utilities, same thing, looking good. Again, very, very toppy here. It could easily come down and then cross back to the upside though. Does not mean it has to just roll over. But again, these things they've run very strong and had some nice new highs. We want to see this hold the heart line of the channel. Would not be surprised to see it come back down here to like 71. It looks pretty toppy for right now. So where's all the money going if everything's topping back out again? Well, we're going to talk about that in a bit here. XLRE, real estate, again, could go either way right here. Does not have to develop into the head and shoulders, but starting to look like this shoulder is potentially putting in a top. We're definitely starting to roll over here. So it looks like we have basically peaked and we're starting to roll over. Depending what happens here, we obviously have a 200 simple on top of the 200 exponential. That's typically what we see at a peak. Does not mean we can't put in a new all-time high, but it typically means that we're very close to like the actual rolling over as we have lost momentum between the 200 exponential and simple. So the 200 simple cross above the 200 exponential because it lags, and then eventually we usually come back down and go lower. Now, again, could we pop up a couple more percent before we go lower? We definitely could. But this is starting to look pretty weak. Hard sell signal, couple red histograms, potential, head and shoulders pattern rather. Looking pretty toppy here. VWO, so we have the emerging markets ETF. Lost that key support. We were looking for it to hold this blue ascending support line. This is a pretty substantial support line going back for years. We have broken down below it a couple of times, so it doesn't have to be game over that we lost it again, but it's definitely not a good thing. We're also under the 200 exponential and simple. We broke down from that channel. We lost the potential support triangle that we were kind of building through here. So again, I think this goes much lower. Now the stochastic has shot straight to the downside and price action has not moved that much. So what I'd be looking for right here is potential bullish divergence to develop because we have a peak way, way, way down here. And then we have, well, I don't know. The stochastics, you see it more, not as much on the MACD. So on the stochastics, we see, we're not that far off of the peak right here. I mean, this one is down at 7 and we're currently at 26. So it's not that further for how much price action has peaked. So if this comes back down here again, the stochastic goes lower than the previous peak, or I guess trough technically right here, but the price action does not. That's going to look like bullish divergence. So we could easily come back down, have like a retest of like 43, 44, and then have a shoot back up and actually come all the way back up and retest the 200 exponential and simple. Don't want to get overly bullish on this. China looks terrible right now in my opinion, fundamentally and technically. DAX. Yeah, I mean, it's definitely rolling back over again. So really got to just see what happens here. It looks like it's going to come back down and try to revisit lows. Same thing. We'll look for some bullish divergence, but this just looks like a failed attempt to retest the 200 exponential and simple. A weak one at that. FTSE China, 850. Again, still trying to cross the 821 back to the upside. If it does, we have a clear resistance at 14,627. We also have the moving averages about 15.2. Hard sell signal. Looks kind of toppy here. It is trying to build a little bit of momentum. No divergence or anything. So, again, none of these are looking particularly good right now. the US or foreign indexes. I would say UK 100 probably looks the best right now. Again, it had revisited those highs, looking like a potential double top as we're getting the hard sell signal, left the bullish control zone, bunch of red histograms, and of course, we basically are at the top of the range. Did we put in? I can't remember. Do we have bullish or bearish divergence here? So here we have a slightly higher peak. So yeah, we're seeing a little bit of bearish divergence and everything as well. Typically, I like to give like 3 drives of bearish divergence, but still looks strong. We'll see what's going on. UK is looking stronger than everything else pretty much right now. So Brazil, it's definitely looking a little toppy over here. We have lost the slope line with the histogram. It has flipped over red officially. So at that point in time, we typically see continuation. Hard sell signal coming out of that bullish control zone. We're looking for that retest about 34. So again, I'm not saying that this is not risky at all. There's more geopolitical risk than there has ever been in the world right now. I would say than literally in most people's lifetimes. At least figuratively in most people's lifetimes. But that being said, I think this is a pretty safe target for the 200 exponential and simple, and then also a key fib level, a retest of the previous little like high inside of this internal cycle. And I think that's going to be a buying opportunity, especially as we see commodities. It doesn't look to me like commodity prices are going to be going anywhere anytime soon. Now, could be wrong here, but doesn't look like it to me. So let's rip through these real quick. So we have the DXY, obviously put in a pretty bearish candle here. Again, this thing has got to be getting tired. We're seeing some clear bearish divergence between these peaks. Not as much on the jewel. So not really seeing like the same kind of confluence we want to see between our indicator oscillators. But it would not surprise me to see this back down at 99 very soon. I was expecting 100 to be at least a temporary top. So that's probably what's going to happen. After that, probably goes much higher over time. And then after that, much, much lower as it, completely is eradicated from Earth. But when is that going to be? I don't know, 10 years, 20 years, 5 years, who knows? So Tesla obviously topped out again at that purple resistance, selling off, losing 8 and 21, retesting those levels. Hard sell signal coming out of the bearish, bullish control zone, bunch of red histograms. Looks very likely coming back down to 900. We'll see. This week's going to be interesting too because we have we have a holiday on Friday, so the U.S. markets are going to be closed, and then so do we have options expirations this week as well? Yeah, so we'll have to look into that and see where those key levels are at. It's interesting whenever we have a holiday on a Friday. But I wouldn't be surprised to see this back at 900. Also would not be surprised to see this back at like 1130 to 11. I mean, I don't think it gets above 1150. If it does, that would be a technical breakout and it probably goes much higher. So I think that's the key level to watch. Next we have ARKK. Again, just looking absolutely terrible. Selling back off, had a tiny little pop today. I mean, just getting absolutely wrecked. It's at its lows still. I mean, it's a couple dollars off its lows. People are like trying to get bullish on this stuff. It looks terrible. SMH, so all right, so we already had hit our target to the downside. We're back there revisiting right now. This is the area that has to hold. This is the 236 on the macro. We have broken down from the key channel that we had right here. We broke out to upside, couldn't maintain it, broke back to the downside, held it, lost it, reclaimed it, lost it again, confirmed into a bear market. Target to the downside for our next big move is 382. Now, can it bounce around here a little bit more in the meantime? I think it probably has one more rejection at like 258. I think a lot of people will be looking to exit their position somewhere in between like 258 and 265 before we go down to like 203. But when this starts to really sell off, this is going to be the final indication essentially for our 4 horsemen of the apocalypse. This is the one that looks the least toppy, and it looks pretty damn toppy right now. We're basically at key support levels, breaking down and flipping into a bear market. So, we saw obviously transportation looks terrible. We saw the yield curve inversion take place temporarily. It uninverted. It's breaking out to the upside. Again, we're at key resistance that has been going on for 40 years. So while I'm not convinced rates don't go higher than they do right now, but the bonds are at key support. The rates are at key resistance. We're in a 40-year downtrend, and we're smacking our head on the top of it. We've been getting absolutely wrecked. Rates have been going parabolic. Bonds have been getting wrecked. So everything tells me that probably rates are topping right now, at least temporarily. And then once they do top, if I'm correct, then we look for an inversion to take place again. And then that's really going to put us at, the recession warning incoming. Because when they invert and then uninvert and start to trend downward, so the 8 and 21 cross on the downward move between the 2 and the 10, that chart that I put up quite a few times, that is when you actually see the recession taking place within like 3 to 6 months. The actual inversion, the first time it happens, sometimes the recession takes 2 years. So that's not really that useful. I mean, it's useful to say, hey, we should probably be de-risking because something bad's probably going to happen in the next 2 years. But if it's still, 22 months away, I mean, how can you trade off of that? You can't. It's just nice to know in the back of your head. So that's what we'll pay attention to. I'll bring that chart up again next time. We'll take a look. So NVIDIA, again, at support, has not broken down from these supports yet. At any time it's came down and tested it, and it looks like it's coming down now. I mean, it looks like it wants to. Maybe it wants to come up and fill this gap at like 231, but we flipped the 200 exponential to the downside. 200 simple is basically flat. NVIDIA is about to confirm into a bear market. Bears are in control. A bunch of red histograms. We have not even lost the slope yet on the TDMACD. Looks bad. Looks very bad. Longer term. Again, we could see a little pop to the upside, but seeing, transportation, seeing the rate inversion, seeing semiconductors potentially topping out, and seeing an energy spike up over 50%, in the last year, or just an overall spike on oil or energy on the charts. I mean, that's the 4 things we've been talking about for 2 years. We said 2 years ago, at least a year and a half ago, over the last year, and then more and more and more, as we got more into recent dates, we've been talking about those are the things we're looking out for. We're looking out for, in November, December, we were talking about transportation potentially topping out at the beginning of the year. And that's what we're seeing now happen. It has happened. We're seeing, we talked about commodities, we talked about oil prices spiking, and we saw a ridiculous spike in oil prices that was supposed to be unheard of. A lot of people were calling for $30 barrels of oil, and what were we calling for? 114 was my target to upside, and we overshot that. We're still over 100 now. I mean, I would say that's a pretty big spike in oil and energy prices. And then on top of that, call for, semiconductor top. I mean, it's sure looking pretty toppy to me right now. And then when you take into account, yield curve inversion that we were looking out for before anybody was even talking about yield curve inversion, we were talking about how we were accelerating towards that resistance line in the 40-year trend. And, we inverted. Now everybody's talking about it. And then we uninverted. And all the morons are like, oh, everything's okay because we uninverted. What don't you get? Everything was bad, and now it's good again. So everything's okay. And that's final. Okay, sure. Have fun losing all your money because you're a moron. Netflix is next. Netflix looks absolutely horrendous. A couple dollars off the lows. Earnings coming up. I fully expect Netflix to get wrecked again, either leading into earnings or after earnings. Probably just going to get absolutely destroyed. Apple, still strong, trying to reclaim that 821, trying to stop the cross at the basic area it needs to be at for it. But again, does not look good. Looks like it's coming back down here at least to retest the 200 exponential and simple. We got this little pop today and everybody's all like, no, that was it. It was the bottom. I don't know. Lots of red candles, on the way up and lots of green candles on the way down. So I wouldn't just look at one candle in an overall bearish. I mean, that's like, you look at Meta and you're like, oh no, look, because today was green. We're up. Meta's up 0.4% today. So everything's fine. Everything's good, right? Right? 189 is my target back to the downside. And this thing's probably just going to keep getting wrecked. Google, hanging on by a thread. This is the key area to watch. 2,500 basically. We bounced slightly above it now. That's kind of good. We flipped the 200 exponential bearish. I mean, the fact that we have just broken down below all the 200s, exponentials, and simples on the daily, shot back up to the upside, came back down and put in lower lows on most of them, came back up and then put in a lower high, and then we've lost them again. I mean, that is literally what it looks like when you flip into a bear market. So, I mean, we're days, weeks, some have already confirmed into a bear market across the board. I mean, I can literally pick on one hand the stocks that haven't confirmed into a bear market, and everybody's still like, no, this is it because the bottom and the bulls and it's all priced in. Okay, sure. When we're back on top of 200 exponentials and simples, they're flipping back to the upside and we're consolidating. Then we'll talk about bullishness. Until then, all bear all the way. Amazon, again, not looking good. I mean, it had a nice bullish engulfing candle out of the bearish control zone after losing key support again, after failing to reclaim the 200 exponential and simple. It's, again, still in a bear market. 200 exponential and simple slope to the downside, bearish. I want to be bullish on this stuff, but it all just looks like trash. I can't make the markets look good. I'm just the translator. So let's look at our cryptos now. If you're in the chat right now, make sure you smash up that like button. I definitely appreciate it if you would, throw me a little comment. Let me know where you're at. Let me know what your favorite crypto is. Let me know what crypto is the most scammiest, trashiest, garbagest crypto. Let me know, if you won the lottery and now you're looking to invest it, where you're thinking about putting it, whatever it is. I don't care. Just say something in the chat, as it is cool, and definitely YouTube appreciates it. And I'm sure right now Google probably not loving my channel, so appreciate a little love from you guys instead. They obviously don't exactly push me out there because my foul mouth and my controversial topics. So that being said, let's jump into our cryptos. I'd like to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So let's look at our cryptocurrencies. We have a Bitcoin futures chart. Obviously has failed to hold the 200 exponential and simple. The 200 exponential has rolled back over to the downside. 200 simple is very close to rolling back over too. We see the TJD master is basically telling us, hey, look, we lost the key moving average. We retested it. We reclaimed it, and it failed. So at this point in time, we are still technically putting in a higher low. So we have right here a low, a high, a higher low, and then this is kind of like part of the same move. So, this is just like an internal portion of the same move. So we kind of ignore that. I don't like to ignore data points, but it didn't put in, a new low right here, and it didn't put in a new high right here. So it's basically just an internal move of either that portion or that portion. So we have a low, then we have a high, then we have a higher low, then we have a higher high, and now we potentially have a higher low. Don't want to see this come down lower than 37.51, or we have broken out of this ascending channel. But we all know what that is. What is an ascending channel? Well, it's a bearish pattern. We have a lead in, which is a downward leg, and then we have a consolidation pattern where we put in lower highs and higher lows and higher highs, and then eventually, once the distribution takes place, we get back to a key level, then we break down and see continuation, another leg to the downside. And to tell you the truth, that's what it looks like. A bunch of red histograms. We lost the blue slope line. We lost the zero line. This is 2/3 bearish right now. The only thing left that could be more bearish is if this slope line flips over red. We have lost the bullish control zone. We got a hard sell signal at the cross right here, and we're headed down nearly into the bearish control zone. Again, we're 2/3 bearish on the Jewel Thief. I'm sorry, on the on the Jewel Thief stochastics. And then obviously we're below the 8, we're below the 21, they're crossed to the downside, we're below the 200 exponential, it has a negative slope, and we're below the 200 simple. It still has technically a positive slope, but it's basically flat right now. So again, we're 2/3 bearish. So if we take all those things and add them up right now, if we have a 3 weight on this, a 3 weight on this, and a 3 weight on this, of the 9 things we're paying attention to, we have 6 of 9 are bearish right now. So, do the math on that. We're basically like 66% bearish right now. So again, always a chance we go higher, always a chance we go lower. But right now, the chance of going lower is 2 times more likely than the chance of going higher, in my opinion. So our Bitcoin spot chart, this is our Bitstamp chart. This one is slightly more bearish. Again, we still have the same thing going on here, the ascending channel and everything, but we are below the 200 exponential and simple, and they are both red or red and pink respectively. We're below the 8 and 21 there across the downside. We're in the bearish control zone. We're below the zero line. We lost the slope line, but technically reclaimed it. So here, technically 2/3 bearish. Here, technically 3/3 bearish. And here, technically 3/3 bearish. So in this case, we have 8 of our 9 portions of these 3 indicators pointing us to the downside and bearish. So again, we have an 88% bearish from our indicators. So it's hard for me to get bullish when 88% of the indicators are telling us, hey, we're probably going lower. And we're in a bearish pattern on top of that. So in all reality, what do you want to call that? 9 out of 10? Might as well call it 90% bearish at that point in time. It doesn't look good. Crypto does not look good to me. We had a bad close. The weekly close, all we had to do was hold above the 8 and the 21. Couldn't do it, closed down below it. And now we're getting rejected at it. Now we're seeing a little bit of price action upside, but how close are we at this point in time to just breaking through or retesting 36? And then if we retest 36, we're probably retesting 31. And if we retest 31, we're probably come down here to 27. So if we retest 27, in all reality, we're probably going to retest 21. So, how likely right now are we to a 50% decrease in Bitcoin right now? I would say there's a very, very high likelihood that Bitcoin and all the cryptos are about to get a 50% haircut. in the next month or so. Now, does it have to happen? No. We could easily go back to the upside. But the way I'm looking at it right now is there's a 50% downside very likely to happen right now. Now, we did get a hard buy signal, but then we failed to cross 821 back to the upside. We did get a few green histograms in a row, but we didn't get above the zero line, and we still have a negative slope, and now we're getting another red histogram. So let's see how this next continuation goes for the next week or two. But think about it like this. It's not like the bulls didn't know. All they have to do is just hold 44K. It's not like they didn't know that. It's not like everybody was like, oh, if only we knew, we could have put our buy orders in, but we didn't know, so we didn't do it. Everybody's looking at this. Everybody sees those key levels. Everybody sees, we have just put in a new high over this previous one right here. We're getting a hard buy signal. We got a bunch of green histograms. There was so much potential right here, and it failed. We were so close to repeating what we had happen right here, and it failed. So does that look more bullish to me or more bearish to me? Looks more bearish to me because we had all the opportunity in the world, and it failed. And now what are we doing? We're doing 2017 all over again. Or really this is 2018 because we topped in 2017. But this was a 2018 consolidation between the 8 and 21. This was that 6K level. And then when we lost the 6K level, we lost 50% of our value in, basically a month or two. And we went from 6K to 3K. And now here we're doing the same thing. We're consolidating between the 8 and 21. We basically called, once we broke down to the 8, they were going to the 21. Then back to the 8, then back to the 21, then back to the 8. And now here we are going back to the 21. So, we've been on top of these markets. They're trading extremely, extremely technically. But how many times do you think we trade in between the 8 and 21 before eventually somebody big sells, whales sell, market makers sell, whatever. Michael Saylor gets, margin called. Who knows? Who knows what's going to happen? But the truth is, that's going to be the real test. What happens when we break below 30K? What happens when we hit 20K and all of a sudden these billions of dollars worth of, leveraged investments are upside down? What's going to happen in the DeFi space? What's going to happen to all these situations when we lose that 30K level? That's the real question. You don't think that market makers, even if they love Bitcoin and they know it's going to $1 million, you don't think they're going to take an opportunity to cause a capitulation in the crypto market and then buy in ridiculously amount of crypto much, much lower? That's literally what markets do. That's what market makers do. They look for levels that they can break through, cause, cascading waterfalls or, cascading stops, and then take advantage of those lower prices. This is exactly what we saw happen in 2018. Everybody's bullish or calling for new all-time highs. We've clearly topped out. Everything is pointing bearish. Anyone that used technical analysis or, fundamental, at least short to medium term, sees that the likelihood is that we're probably going much lower on this speculative asset that is directly correlated to rates. So if Bitcoin was an inflation hedge, why isn't it going up as inflation goes to all-time record highs? Oh, they front-ran the inflation. Okay, sure. So now the inflation's done, or when is it done front-running? So if Bitcoin is a store of value, why isn't Bitcoin going up, storing any value? Well, I don't know. Because it already did. It already went up a bunch, and that's it. All these arguments are getting destroyed. So the white paper doesn't work anymore because Bitcoin is not, what it was supposed to be. So you switch your argument to it's a store of value, and then it's digital gold store of value. Well, that's been dispelled now. That doesn't work anymore. So now what is it? Well, it's directly correlated to the stock market. So it's what I've been saying the whole time then. So it's a leveraged, play on tech sector, or a leveraged, speculative investment or a speculative trade, which is fine. But let's just be honest with ourselves about what it really is. And that's exactly what I've been saying. Let's just be honest with ourselves. Because I love crypto. I have a crypto channel. But there's too many delusional people in the space. And I saw this happen to so many people in the last crash. In 2008, I saw price action at 6K. I posted all about it. I expect another 50% haircut. Got absolutely crucified by people. And then all of a sudden we dropped 50%. And then those same people that were super bullish and love crypto and Bitcoin in the future and were swearing by it and everything, they all capitulated. They gave up. They sold the bottom. And then when I was saying everybody should be buying right here, this is it, 3K, this is the bottom, we're going, new all-time highs after this, beginning of the next cycle, 4-year cycle has played out once again, nobody's listening. Nobody was around. Nobody cared. So remember, people get the most bullish at the top and the most bearish at the bottom. And that's what it looks like is happening to me. It looks like we're getting ready to have another, 50% haircut. And we know the 50% haircut from 6K took us to 3K. The 50% haircut from, 40K takes us to 20K, retest the previous all-time highs. Who knows what happens then? If we lose that level, it's going to look super sketch, but I would not be surprised. But right now, all red histograms, this is months of bearishness. I mean, since we put in this first drive and then we started creating this bearish divergence right here, we have had 3 bearish months, 1 bullish, 4 bearish months, 3 bullish, and then we've just had another 5 in a row. So we have 9 bearish months and 3 bullish months. So 9 months of histograms going to the downside and 3 going to the upside with bearish divergence on a monthly and weekly chart with stochastics accelerating to the downside on the monthly. These are not getting closer together. They were starting to get closer together right here at the 70K push up, and now they're getting further apart. The distance between the blue stochastic and the pink stochastic here is less or more. I guess if we look at this here, it is more than it was back here. So we are diverging. So that means the trend is accelerating to the downside on a monthly chart. But that's bullish because fundamentals and the institutions, and you just need to read the white paper because you don't understand, and I'm not even listening to you anymore because you're mean. So I mean, but you know, whatever though. I mean, who cares what I think? I'm just using actual technicals like, you know, statistics, math, you know, important metrics that are measurable. You know, I can't measure feelings. So, I mean, you can. You look at like fear and greed index maybe, but is that even accurate? I don't know. So anyway, Ethereum lost to 200 exponential, below it now, well below 200 simple. Basically got rejected exactly where you said. Retesting the bottoms, you know, again, higher highs and higher lows, but it's a bearish pattern because we have a lead in to the downside, then we have a couple bounces to the upside, a rejection off a key level. We lost the, you know, the histogram is below the slope line now. We're in the bearish control zone. Stochastics are at the bottom of the range. It looks terrible. We lost the 821s, cross back to the downside. I don't see anything bullish right now at all in Ethereum. But it is slightly more bullish than Bitcoin. Total market cap, again, all it had to do was hold that 2 trillion level, lost it, now probably goes much lower. Looks very, very weak. This is our weekly chart, and it's weak on the weekly. So here's our Bitcoin dominance chart on the weekly. Again, we lost the 821, crossed back down to the downside, kind of consolidating around this level. Maybe we revisit the lows. Maybe we just kind of hang out here for a little bit. Maybe we go higher. Tough to tell. I do think this has probably bottomed for now. Doesn't mean we don't come down here and put in another bottom, but we do have 3 drives of bullish divergence on the weekly. We had a weak little pop after the last one. Typically, how do you know? People ask me all the time, how do you know when the divergence has already played out? Well, if the move for the divergence of the first one was here to here, and then the second one was slightly lower and slightly lower, we would expect the divergence to be a breakout of the range. So if we have 3, you know, consecutive lows and 3 consecutive lower highs, for a bullish divergence to play out, we would expect a break of the range. So we wouldn't say that this, you know, and we could easily get a 4th drive and then come back up here, and then it breaks out, and then we get the measure move. That would be the divergence playing out. But typically when the divergence plays out, it's a break of the range. If we just push up here like this, and then it's like, oh, that was it. We had 3 drives of bullish divergence, and it played out. Well, no, because the bullish divergence is telling us that this is an unsustainable trend, and the trend is continuing. Because the trend is a low, a lower low, a lower low, high, a lower high, a lower high again. So that's not a breakout. That's not, you know, the trend being unsustainable. That's literally the trend just doing the same thing again. So there, in no way is that the divergence having played out already. When the divergence plays out, bullish divergence, we would expect a break of the range that no longer validates this. And then what we see is, instead of the indicators and price action diverging or doing opposite of each other, they, you know, converge or like come back into a line with each other. So they're telling us basically like, okay, now price and the indicators or price and the oscillators are back in line. Everything's good. We reset. You know, now we can be more accurate again. But when we're getting that bearish divergence or bullish divergence, it's basically the market or the price or the indicators telling us, hey, something's not lining up right here. What we keep doing, we keep going higher with less energy or lower with less energy, or we keep going higher with more energy but less than the last time. That's essentially saying whatever we're doing right now is not sustainable over time. So we have Matic next. So it did actually come down here and put in a new low based on closes. That is very bearish. We're just caught in this downtrend going down. high, low, lower high, lower low, lower high, lower low now. So maybe we come up, put in a lower high. I mean, it looks terrible. Clear downtrend, bear market. BNB came up slightly higher than the previous peak right here. It's holding price action better. This one looks a little more similar to like Ethereum or something like that. But again, looks very bearish. It's very, very weak right now. All these are so weak. Avalanche came back down to our yellow support line, held the support line for now, getting a push back to the upside. So now we'll look for resistance potentially at like the same kind of descending resistance range. So we're kind of just pinching into this triangle. We did have a technical breakout. We did have kind of a new high right here. So, it looks a little bit more like the Bitcoin chart where we basically have like a low, then a high, then a lower, higher low, then a higher high, then a higher low potentially once again. So maybe another higher high, and then we actually get this trade. I don't know. We'll see. It doesn't look particularly great. Could you take a trade right now and just hope and wish that it goes to the upside? I mean, you could. What would it look like? Well, I mean, that would be your real clear invalidation point. So it's like 15% off. And the upside target's like 22%. So, that's basically the range that we're looking at right now. So I don't really see a trade there, honestly. Solana rejected off the 200 exponential, never even made it back to the 200 simple. Technically has a higher low for now, but who says this is the low and we're not just going much lower? Not me. It looks like we're going much lower. Bears in control, below the slope line, at the 0 line. Slope is still blue for now. Lost the 821, below 200 exponential and simple. It looks terrible. Cardano obviously was not looking to have any kind of bullishness come out of there. Again, not looking to trade this. It's total trash. It's been a bear market confirmed since back at $2, in November of last year. This thing has looked like trash since then, consistently just selling off, just melting down. Charles Hoskinson exposed for being a liar and a fraud. I mean, that can't be good, right? Well, I mean, who cares? It's a cult. Who cares? Charles is a good guy. He might have lied about some of his credentials, and, maybe he is a scumbag piece of shit, but he's our scumbag piece of shit. Fucking Chucky. XRP, again, looking like trash. No, it's good. The SEC is the manipulator. No. It looks like trash. It looks absolutely horrendous. It's one of the few cryptos that didn't even put a new high in this cycle. So if you were going to buy any crypto in the whole entire space, well, probably just stick to like the top 10. And then if you're going to buy out of the top 10, just 100%, don't invest in stable coins because they're not going to appreciate. One. And two, don't invest in XRP because it's trash. But XRP is on the data and they're going to take over the Swift network and the... No. How about no, Scott? XMR, Monero. So it had that push up here. Could not hold that level. See, that's why it was so important. We talked about this a couple times. The two ways that you could draw this channel. And if you had the channel drawn the way that most people did, it was already a technical breakout. If you had it drawn the way I drew it, we basically broke out of it and then failed to hold it, failed to hold it, failed to hold it. Kind of pushing up right now, but doesn't look particularly strong. So, I mean, we'll see. It looks better than most cryptos. It's back on top of the 200 exponential. It's back on top of the 200 simple. There's slope to the upside. But let's be real. What's Monero going to do? It's going to do what everything else does. So is there a trade here? I mean, there's potential for a big, fat, juicy trade at like 9-1. But, expect to lose that 8% stop loss. And then if you don't, there's a great risk reward. But that's what I would do. That's how I look at it. I don't expect Monero to all of a sudden just be great when everything else looks like trash. But we could definitely have a pop up here in the next few days. I mean, I could see Bitcoin's 4-hour trying to push back to the upside and push back up to retest the 200 exponential and simple, which is basically around like 43,300 or something like that right now. So if Bitcoin all of a sudden shoots up, 5%, 10%, something like that, what's Monero going to do? Could it go up 70% or 60%? Sure it could. Sure it could. Especially if other people looking at the same chart and thinking, oh, it's all about the privacy coins. Oh, it's all about the technical breakout. Oh, I like the name Monero because it rolls off your tongue. I don't know what people trade on anymore, but, definitely a possibility. I think of all the charts we've looked at, it's probably the best looking one. I do want to call out one of the trade members for pointing that out and requesting me to look at that. You know who you are because, that is probably the best chart in crypto or one of them right now. Maybe not the best, but very, like, top probably 10 right now. So I know like the lunar chart or whatever has been looking pretty good lately. So let's go on to gold. So gold did a couple of key things here that are really important to me that I really like to see if you want to be bullish on gold. It took out this high right here, which was a key point, that 1957, 1960 range. That's huge. It also came up and hit a key Fibonacci level, which is where it's at right now. Don't love that, want to see it get above that, but it's definitely important. So it retested the 786. So what is that? Well, if we go back here and we have the high from August 2020 to the low, or alternatively from the low to the high, depending on how you want to look at it, because it's technically just the same high. So if you measure from the bottom to the top, or you measure from the top to the bottom, either way, it's just going to reverse where our fib levels are. But we have the 786 right here, which is exactly where gold just bumped its head. So as far as I'm concerned right now, you know, this basically looks like what we've been talking about. The descending potential channel to downside, bumping the heart line a couple times, breaking above the heart line, hitting a key fib. Next target to the upside would basically be the 886 and the top of the channel. Now, typically, when we retest an 886, we see new all-time highs before long afterwards, or, you know, break through the swing at least. So if we do get up to that level, it's going to look pretty bullish. If we top out right here and then go lower and put in a new low, you know, which is my target to downside, about 1864, that's not going to look so bullish, obviously. You know, we flip the slope line back to the upside. The majority of the time when this happens, and it's not always, but the majority of the time when we flip the slope line back and the stochastic or the histogram is still under it, we usually come up to it and then get rejected. You know, so we'll see what happens, especially if these start to look tired. We're about to enter in the bullish control zone. We see the knife starting to roll over here. You know, obviously we got the hard buy at the bottom of the range right here. Since then, it's moved a little bit to the upside. Looks okay. You know, unless you're paper trading gold, though, it's not like that super useful. You basically have to look for a macro move breakout on gold if you're going to go out and buy it, because you pay a premium when you buy it, and then you give up that premium when you sell it. So the amount you make has to be over, you know, 5-10%, whatever your minimum premium is going to be, or you end up just breaking even. So in all reality, you have to expect at least a 10% move, and probably something play out over a long period of time to be like investing or quote unquote trading gold, unless you're doing it with like paper contracts or through some proxy. So in my opinion, we're very close to potentially me throwing a little bit more into gold. Obviously commodities are just going through the roof. So in the meantime, I would rather put that money to work somewhere else that is having a technical breakout, or putting in, you know, putting in all-time highs or new cycle highs, than something that is still kind of consolidating. Because, you know, let's be real, gold has been dead money for the last like year, while a ton of stuff has just gone absolutely parabolic. Really, I mean, almost a year and a half at this point. Silver looking okay, bounce to 200 exponential, bounce to 200 simple, getting ready to flip to 200 simple back to the upside. Starting to have some nice little moves right here. Again, we got some key levels to watch on silver. Obviously something above like 2650 looks pretty good. In all reality, I mean, if we start breaking above, I mean, we're holding above 25 for right now. So in all reality, I think we probably, if we go above 2650, we probably go to 2719. If we go to 2719, we probably go to 2820. If we go to 2820, we probably go back to 22. No, I'm kidding. There's a possibility we break out to upside. Now, it hasn't happened yet. So why should it happen now? Well, I mean, it's starting to look a little stronger. It's looking okay. And the gold silver chart is broken back down from the 200 exponential. The key thing to look out for is, you know, do we put in a lower low? So far, we've been putting in, you know, low, and then a high, and then a higher low, and then a higher high, and then a higher low. So if we come down here, we take out that lower, higher low, man, if we take out the higher low at 75.50, we probably break down from here. And that probably means gold is having a technical breakout and silver is outperforming. If the opposite happens and we break back to the upside, it means we probably topped again and we're going back down inside that same range for gold and silver. So palladium had that pretty nice push up, couldn't hold it, push back up again, holding it for now. So we're back above 200 exponential, back above 200 simple, starting to flip the slope back over. Palladium looking okay. I keep meaning to switch that chart. Platinum still looks terrible, still consolidating below the 200 exponential and simple, both slope to the downside. We do see a divergence signal, buy, sell, buy on the indicator. So telling us there's a potential here for a scalp move. So where is that going to take us to? I mean, can we do some kind of descending channel action here, or what's going on? Let's look at platinum. I mean, I would just expect automatically anything platinum does to be like an underperform. Okay, so that looks pretty technical. So we have a high, a high, a high, all touching this channel. We have a low, but we don't have any more touches on the bottom. So you're like, well, that's only one touch. That doesn't look good. Well, let's look at the heart line. Here's a perfect touch right here. Here's some consolidation at it, above and below it. Here's consolidation at it, above and below it. And then again, consolidation at it, above and below it. And then here we're seeing, again, it's acting as resistance and support. So that looks pretty technical to me. Obviously, the fibs are acting clear, resistance and support. We see a touch here, a touch here. We see, again, a bunch of support here and then acting as resistance. So the fibs are key right now. The descending channel is key right now. I think in all reality, I mean, could this go either way? It should go up. It should go up. I mean, everything else is going up. Why doesn't anybody want platinum? It's shiny. It's pretty. Looks cooler than silver, honestly. 15% to the upside. Does it go? I mean, probably not. And honestly, there's no trade setup right here because the real trade setup, you know, you're in the middle of it because it's this channel. So the real thing you would have to look at if you were just all out, just super bullish on platinum and you just need to justify a reason to buy or invest in platinum, you know, this is what you're looking for. You don't want to take out this low right here at 950. So it's a pretty tight stop loss, 4%, you know, in and out. And then your target to upside is 15%. So you have like a 3.69 risk reward ratio, buying into, you know, divergence signal on the jewel thief, a bunch of green histograms, and, you know, essentially what amounts to it just being getting wrecked forever. Now you're fighting the 200 exponential and simple, and you're buying like the worst commodity other than pot stocks, pretty much it exists. So, I mean, but is the risk reward ratio good enough at 3.69 to 1? I mean, you got to decide for yourself, but. Okay, so here's the ACB trade that we had talked about. So here's the thing about the ACB thing, you know, trade. We have a left shoulder. We have a potential deeper right shoulder. So that's not good. It's technically bearish. You don't want to see a deeper right shoulder or, you know, a bullish right shoulder in a normal head and shoulders because it means that whoever's in control is strong, which, you know, if you're in an inverted head and shoulders, it means the bears are strong. If you're in a regular head and shoulders and the right shoulder is stronger, it means the bulls are strong because they took out the level that the left shoulder topped at. That being said, you know, we didn't close below the invalidation area that we were paying attention to. So technically this trade could still be okay for now. I mean, it has a nice risk reward ratio and everything, but, you know, I really don't want to get too excited about these pot stocks. I think if you're really looking for somewhere that you just have to get like super bullish on right now, you know, and you want to buy value and also, you know, look into the future, I think pot stocks are okay for that. But also, we just had bullish divergence play out after like 3 drives and putting in consistent lows, and we failed to break through this area. So I don't want to get too bullish on pot stocks right now, but it does look okay, and there's definitely some potential. Tilray is crocked back to downside. Same thing. You know, it had a nice little pop, just had a big move, but why doesn't it just put in another lower low right here? I mean, it probably does. Probably does. I don't want to get too bullish on these pot stocks right now. I took profits on these, and I took profits for a reason. These are below the potential entries before. So if you didn't took profits, I mean, that was like 25% that you just gave back, and now you're down. CCJ, so we finally got that push up here. We're finally tagging our areas. I want it to go slightly higher just because, you know, I'm a perfectionist, and I want it always to do exactly what I think it should do, you know, and never doubt me, which is $33.73. So uranium, you guys know, we just did a deep dive on uranium. If you didn't watch that, you better watch it. You should have watched it. You probably just missed out on some massive trades. So that being said, target to the upside, 33.73 still. Starting to look kind of toppy here. You know, that's 4 red candles in a row while putting in highs. Usually not sustainable. Usually not sustainable. You at least want to see, you know, we had a big green candle out of nowhere and then 4 red candles that just went higher. It's usually some toppiness right there. And then, you know, some potential for bearish divergence. We're not seeing anything yet, but again, this is looking pretty toppy and it's almost to our target. I don't like to be greedy on these things. So next we have URA. So URA trying to push up here again to the highs. Didn't quite get down to the area that we were looking for on the pullback, but fairly strong. Again, got to look out for some potential bearish divergence on these. And then UEC, we saw a nice move to the upside. Big push up today, 13.74% today. Just been going steady up the last few days. So we broke through that key level, put in a new high, and this thing is just cruising. So what does this look like? I mean, it looks strong now, obviously. You know, blue sky breakout, at least, you know, of this cycle. But I don't know. This uranium trade has got to just be so crowded right now. I feel like everybody's onto it. And nobody liked uranium for 30 years. Now everybody loves it. That's probably the top. It's probably the top. Knife sticking up here pretty high on U quad. Retesting the highs. Had a nice little day today again. 8% up. Looks pretty good. Bouncing the slope line here. Crossing the stochastics back to the upside. Looks pretty strong. I mean, these uranium stocks obviously look strong. That's why we were talking about them. UROY, again, not quite as strong, not nearly as strong, but still looks pretty good overall. Still looks pretty good overall. Not nearly as good. Do these things look toppy, or are they just ready to rip? I mean, it honestly could go either way right now. I'm not like dumping my positions, but I'm taking some profits. I'll tell you that much. All right. So we made it through all of them. Oh, we breezed through everything. We just crushed it. We absolutely destroyed it. The same way we destroyed the markets, we destroyed the charts of the markets. We're crushing. We crushed. So we took a look at all the indices. We talked about the macro. We saw the DXY. We looked at tech and friends. You know, basically the prop market of the stock market. We looked at crypto. We looked at commodities. Looked back at the uranium and the pot stocks. I mean, that was it. Why did we fly today? I went on a tangent, didn't I? That was crazy. 1 hour and 7 minutes. Okay. So yeah, I guess we'll wrap it up right there. Definitely appreciate everybody showing up today. Rip through here. Hopefully y'all enjoyed the stream. Obviously appreciate all the group members and their support. I know everybody's pretty busy this time of year. I'm always busy with like tax season and, you know, quarter ending. And this is, for me, this is the craziest time of the year. So definitely looking forward to the next like week or so passing. And then, you know, obviously like Easter and everything coming up. And then after that, just kind of calming back down and getting back into the groove of things. Always a little crazy right around this time of year. I'm sure most people are feeling the same way too. Just make sure that you know, take care of yourself, take care of your, you know, trades or investments. Don't get complacent in these markets. You know, we're at some crazy, crazy times, geopolitical, you know, technical, everything. So, you know, more volatility and more danger, in my opinion. Danger, Will Robinson, than we've historically seen in most people's like trading or actual lifetimes. So now is the time to be locking in games, protecting profits, you know, being intelligent about your investments, etc. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. For those people out there of the, you know, Catholic, Christian, whatever faith, and want to or do celebrate, you know, obviously like Good Friday, Palm Sunday, Easter, all that good stuff. You know, happy holidays to all of you as well. And for those of you who don't, you know, potentially enjoy the extra day off of work if you work for the government. But that being said, no trading on Friday. The stock market will be closed. Also, I may take this Friday off and not do a live stream. I don't know yet. I haven't decided. I may have some things to do. So possibly going to stick to the regular schedule on the Friday 11 a.m. Eastern Standard Time stream. Possibly going to take this Friday off. Regardless, what I will do is I will post the stream ahead of time, like at least an hour, probably 2 hours ahead of time if I'm going to do it. So 9 a.m. Eastern Standard Time or 10 a.m. Eastern Standard Time. So you'll be ready and expect it. If not, if you miss it, you can just watch it back later, obviously. But if I don't stream, you know, that's why. Just spending some time, taking care of some things, spending time with family, etc. For the holiday myself. So I'm not sure what's going to happen with that yet, but just want to give you guys a little heads up. But we will 100% be back on Sunday, 10 p.m. Eastern Standard Time. And then, of course, Wednesday, 10 p.m. Eastern Standard Time. And if you're just like, dude, that's not enough, only 2 times this week, like, oh man, I'm like struggling with 3. Like, I wish you would just stream every day. Well, there's other things out there for you. You get access to the indicators, the TJD Master, the Jewel Thief, and then also the trade group as well. And you have access to me pretty much 20 hours a day, every single day, to ask questions, talk, chat, hang out with the group, support the work that I do. And that is, always an option as well. So if you just can't get enough and you want some more, it's pretty reasonable, and you can get it. So that being said, going to go ahead and call it there. I appreciate you, Bobby Honkiness, you as well, my friend. Calma Betty, appreciate you as well. Thank you, sir. I appreciate your analysis. Of course, my friend, thank you. And with that being said, I'm going to go ahead and wrap it up there. It is Wednesday, 9:14 p.m. Man, that's crazy. We ripped through it today. God, we were on fire. 9:14 p.m. Eastern Standard Time on, what is today? Wednesday, April 13th, 2020. I am Crypto Trend Trader, and I am out of here.